Good day, YouTube. This is Jay Money with Falling Forward Financial. Here's two stocks under $100 that you can buy and hold forever. This came out just a couple days ago on the 16th. Banking industry is highly cyclical, but also dependably bounces back from headwinds bigger and better than ever. U.S. consumers and corporations are too addicted to mobile communications to stop paying for them. That is true. Everybody's on a mobile device, so that is definitely a good catalyst with one of these stocks that we will be going over here eventually. So the highest quality stocks don't always sport the highest prices. In theory, the absolute price of a stock shouldn't matter. It's purely a function of the number of shares a company issued compared to how investors feel about the organization's earnings prospects. A stock's price can be adjusted lower by a stock split or pushed higher by a reverse stock split, compared to holding two $10 bills instead of one $20 bill, or vice versa. So that's a very good analogy. I've never heard that one before. So again, compare it to holding two $10 bills instead of one $20 bill, or vice versa. In reality, however, a stock's absolute price can impact the market's perception of that company. A handful of corporations even seem to make a point of maintaining an inflated stock price to suggest something of an elite status, while other companies prefer to keep their stocks prices relatively modest so more small would-be shareholders feel comfortable setting into a position. So with that as the backdrop, here's a closer look at two sub-$100 stocks. Actually, you could probably get both of them for under $100, but the first one, and Forever Holdings, that's true. So Citigroup, if you think the banking giant Citigroup is recession-proof, think again. Indeed, it and other banks may be well the proverbial poster children for recessions. Undoubtedly trapped by economic weakness and interest rate volatility that tends to materialize when the economy is hitting a wall. That's because borrowers often remain on the sidelines in uncertain environments. It's certainly been the case this time around, even before the Federal Reserve imposed a 75 basis point increase in the Fed funds rate this week. The Mortgage Bankers Association was reporting that demand for mortgage loans is now roughly half of what it was a year ago. Falling back to late 2018 levels, that's a clear problem for banks, and it's one of the key reasons Citibank share prices now sit 40% under the mid-2021 highs, and the banking business was riding the wave of the past pandemic recovery. So that's down quite a bit. So here's a look at Citibank, currently at $46.52. Looks like just about a month ago it was at 54. So it is down. $90 billion market cap. Days range $45.99 to $47.29. So about a $1.29, $1.30 range. So you could trade it a little bit if you wanted to. 52-week range $45.40 to $74.64. So it is down quite a bit. Volume, quite a bit of volume on this one, over 35 million. The average is about 25. What all of this selling looks past, however, it is predictably cyclical nature of the banking business. Yes, 2022 is going to be a tough year for the banks, and not just for their lending arms. Demand for corporate fundraising is also poised to contract after a record-breaking 2021. That, according to Refinitiv, saw $360 billion raise via 1,800 initial public offerings. If the economy weakens, the stock market will too, undermining investors' interest in actively trading equities. Stocks slide over the course of the past 12 months, though arguably already reflects the bulk of the company's potential and temporary downside, priced at just under $48 a share. C shares are trading at only 7 times this year's expected earnings and only 6.6 times next year's expected bottom line. That's dirt cheap even by bank stock standards. So might be a time to look at it, and a decent dividend of 4.4, so I might take a look at that one tomorrow. So that's ticker C. Can't get any simpler than that. Next is Verizon. I have a bunch of Verizon. I probably have more AT&T than what I do Verizon, but I like both of them. In the same sense, consumers and companies will forever need banks, and now that we've become accustomed to having them, the world is also going through perpetually need and means of communicating via mobile devices. Next is ticker VC, is the top low cost way to tap into the dynamic. As you can see here, looks like it was about $51.50 just probably about 2 weeks ago. This used to be a $58 stock. And it's right now $49.03. Actually had a green day on Friday, $206 billion market cap. Days range 48.53 to 49.48. 52-week range of 45.55 to 56.85. Volume of over 36 million, average of 22 million. If you're looking for a double-digit percentage growth, look elsewhere. You're not going to get it with this stock. The year's anticipation 2.3 revenue growth is pretty typical, and much of that improvement can be attributed to the price increases rather than the market share growth. Verizon's earnings are growing just as tepidly. That's because the market itself is very nearly saturated. Pew Research reports that 85% of Americans already own a smartphone, while a whopping 97% of people in the United States own a mobile phone of some sort. Some of the consumers will try out a new carrier from time to time, but we're nearing the point where mobile services like Verizon, AT&T, T-Mobile are merely swapping customers with one another from one quarter to next, instead of creating outright new ones. So I've always had Verizon. I've never switched. I've had that for the last 21 years. So, but I do have all three stocks. The T-Mobile is the biggest growth. AT&T is probably about 19 and change, or $20. I think T-Mobile was about 120. No dividend with that one, and Verizon does give a dividend as well. Both the top and bottom lines are growing reliably, though. The $134.3 billion worth of revenue the company has driven over the course of the past 4 quarters is 6% better than the top line from the 5 years back, and nearly 20% better than the annualized sales a decade ago. Per share profits are on an even steeper long-term growth trajectory, and with the company working on platforms like private wireless networks and custom-built edge computing offerings, telecom giants clearly got a plan to sustain that fiscal progress even after the consumer wireless market peaks. Here's a look at Verizon Communications revenue in purple, and then their normalized diluted earnings per share. So you can see the revenue is way up above. Perhaps the even better bullish argument for stepping into Verizon, however, is how well the cash cow is able to support its dividend, while the trailing 12-month dividend total of $2.56 per share translates into an impressive yield of 5.2. That seems like that's a little bit higher than what it used to be. I think it used to be 4 something, compared to the present stock price of $49.30. That there's still less than half of the per share earnings of $5.44 Verizon produced during this time. So we got a little bit of financial cushion there. But if you have either one of these, you can leave that in the comments. Which one do you like better? How many shares you have and what your cost basis is. It would be interesting as well. And I'm definitely going to look at some shares of Citibank. So I used to have a couple banks. Probably the only bank that I have right now is Bank of America, but definitely going to take a look at Citicorp. I think I used to have it way back when and got rid of it for whatever reason, but now that it's down, I'm definitely going to be taking a look at it. So If you have it, go ahead and list it in the comments, or if you have any other banks you want to list that you have, we could look at those as well. But once Robinhood loads here, so currently I was going to say that can't be right. $10 is like, I want to buy some right now. So if we look at this over the last year, wow, it is down quite a bit. So it's down over 31%. This was a $60 or $70 stock. That's what I thought. So if you look at it over the 5-year, yeah, it stays in that $60 to $70 range. Took a dip here back in $18 to $50. There's January at 81. Wow, that looks like it was at the height, and then just bam, pandemic. 38, so it still didn't drop. It's dropped quite a bit, but from 81 down to 38, so would have been an excellent time to get some. Had a nice run up to almost 80 bucks again. Now it's coming down again, so this one looks like it might even have some play. It looks like you might be able to trade it from time to time, so something else to look at. But if you have any Citigroup, like I said, leave that in the comments along with your cost basis, any other information you'd care to share on Citibank or Citicorp, actually, same thing. And if you have any other bank stocks out there. So I used to have Horizon, a couple other ones. I got rid of them a while back. They just weren't appreciating enough, so I got rid of them. But that is it for this video, Citibank and Verizon. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.